Hi everyone, welcome to the post-market report for 30th April 2026. Here we are going to discuss how the markets traded today along with some stocks and news as well as bonus coverage of a commodity in focus. First and foremost, let us take a look at what transpired for Nifty. Today, Nifty opened lower and headed lower in the first half of the trading session before recovering some of its losses as it closed near its open price. The NSE index fell by 0.74% to close lower by 180.10 points at 23,997.55, just below the 24,000 mark. Initial losses were recouped today due to a corresponding correction in crude oil prices as well as value buying at lower levels. Most sectoral indices ended in the red, with losses being led by metals, realty, and consumer durables. The IT sector saw some minor gains while volatility saw another spike today due to the wider range of trading. After today's correction, supports will now be at 23,940, followed by 23,770, while resistances will be at 24,100, followed by 24,285. On Monday, the consolidation within a range can be expected to maintained, and there may be a negative bias if crude oil prices stay elevated above $120 per barrel. Domestic cues will be in the forefront, however, with election results from multiple states being declared on the day, with divergences from exit polls deciding movement on either side. Nifty will regain stronger bullish momentum only if 24,660 on the upside and bearish momentum if 23,555 is breached on the downside, with range-bound trading with a negative bias being the view for now. Now let us check what happened for Sensex today. The BSE index saw a correction of 0.75% to close lower by 583 points at 76,914 for the day. After today's correction, supports may be moved lower to 76,920, followed by 76,365, while resistances may also be moved lower to 77,405, followed by 78,020. Sensex will be bullish if it recovers above 79,360, while bearish momentum will dominate below 75,870. Next, we will take a look at the levels for crude oil. Lack of engagement between Iran and US in the ongoing conflict has kept playing spoilsport as crude oil prices kept edging higher. The commodity opened with a gap up today before correcting to lower levels. Volatility is still elevated at the counter and bullishness can be expected to continue till it finds an equilibrium. Supports after the continuation of the rally will now be at 9,950, followed by 9,670. While resistances will be at 10,220 followed by 10,590. With no respite in sight for now for the Middle East conflict, the supply shock and hence the uptick in crude prices can be expected to continue despite UAE's exit from OPEC. Any new updates from the region will cause wild price swings, so trading with strict stop loss will be prudent. The commodity will remain bullish above 8,880, while a break below 8,440 may cause the bears to tighten their grip. Finally, let us look at a few stocks in the news today. Adani Ports reported a strong Q4 performance, with net profit rising around 10% to 3,329 crore rupees, driven by robust cargo volumes and higher realizations. Revenue grew 26.5%, while EBITDA margins expanded to 61%, and the company also announced a dividend of 7.5 rupees per share. Federal Bank is set to acquire select retail credit card assets from Standard Chartered India as part of its strategy to expand in higher yield segments. The move is expected to strengthen its retail portfolio and boost growth in unsecured lending. Hindustan Unilever reported a strong Q4 performance, with net profit rising 21% year-on-year to 2,994 crore rupees. Revenue also grew over 8%, and the company announced a final dividend of 22 rupees per share, boosting investor sentiment. Before we sign off, we would like to let you know that a free webinar on the topic Profit Booking Tricks, Moving Average for Profit in Option Trading, will be conducted this Saturday at 12 p.m. Do check the description for the webinar link. With this, we end our post-market report for today. Thanks a lot for watching, and as always, do not forget to add a like, share the video, and subscribe to our channel for stock market related updates.